Hello and welcome. It's a Monday and this is the marketplace. Here we analyze the market. We talk about trends and investments and how global development impact business activities here in Ghana, including yours. On the program today, World Bank assures that major development project for Ghana will not suffer despite uncertainty surrounding the upcoming elections. And also on the program, gas supply from the Ghana National Gas Company to the Abuaze Power Enclave said to have reduced considerably, leading to the loss of 230 megawatts of power. All these and more we are looking at here. And finally, generator manufacturers and distributors are taking advantage of the dwindling electricity supply and demand gap in Nigeria to improve diesel generating sets. All these and more here on the market. But you can get interactive if you want to. Our Twitter handle is Joy Business GH, and of course on Facebook is Joy Business. For more business stories, you can log on to myjoyonline.com. My name is John Kojo Amwako. Marketplace returns after the break. You're welcome back, and this is the marketplace. In our first story, the World Bank has assured that major development projects for Ghana will not suffer despite uncertainties surrounding the upcoming elections. Some of the country's development partners and even investors have had to slow down some major projects just because of elections. The challenge has come about because of fears that the new government might not respect agreement reached with current managers of the economy. Sergei Kulaiki is country's program coordinator for Ghana at the World Bank.
Yeah, this is, by the way, as I say, Ghana probably should be excluded from this list of countries where the elections throw in jitters. What I'm saying is that our work and our investments that we're doing currently as we speak, we're continuing the full-blown scale program working with the country. And probably this is the example people should follow. We trust that the programs that were agreed will be implemented. As I say, they are not immediate. They are not tailored to a particular government liking or not liking. This is the very thoroughly prepared and balanced program that are benefiting a large majority of the population in the country, and they are really aimed at improving the business climate, the macroeconomic situation, and other things. That's what gives us confidence that this is something that will be implemented. And I don't think that this is really, we need to, because we are not in the speculative markets. Like, sometimes you see, oh my God, this vote in the parliament for this particular law immediately sends the markets to jitters. Next day you see everything is rebound and everything. This is a speculatory approach to this one. We are not speculators on the markets of Ghana. We're partners. We're reliable long-term partners for the country.
And Ghana may face some challenges in initiating processes to sign the Economic Partnership Agreement, EPA, with the European Union, the EU. That's because the EU is threatening to take Ghana out of the list of countries that qualify for initial negotiations on the agreement. Why and what would the way out? Geography has more in this report.
Persons close to negotiations with Ghana on the Economic Partnership Agreement, the EPA in Brussels, Belgium, says the threat is being influenced by delays by the Ghanaian government in taking the necessary steps to sign the Economic Partnership Agreement before October 1 this year. Ghana is currently part of 8 countries on the Market Access Regulation, a list of middle-income countries that have the right to negotiate with the European Union on the pact. However, the European Union is threatening to take Ghana out of this list. Sources say the EU even wants a decision to be taken by August this year as to whether Ghana will indeed sign the agreement or not. Signing the Economic Partnership Agreement will ensure that exporters in Ghana will have access to the EU market quota-free, duty-free. Otherwise, their exports will attract high duties from October 1. Some firms in the country that export to the European Union have told Joy Business that they might be forced to lay off their workers if Ghana fails to sign the Economic Partnership Agreement.
The Director General of the Securities and Exchanges Commission, Dr. Edu Ananientwi, has reiterated the need for multinationals to list on the Ghana Stock Exchange. He argues, among others, things that the move will benefit the country as economic challenges such as foreign exchange losses could largely be addressed. The SEC's renewed call follows report that Nigeria's legislature is to pass laws that will compel multinationals to list a substantial part of their operations on the Nigerian Stock Exchange. Victor Avevo of Cal Brokerage now joins us on the line to explore the implications of this particular move by the SEC. Yes, Victor, you're welcome to the marketplace.
Yeah, hi. Good afternoon.
Exactly. There's been calls for Ghana to legislate for multinationals to list on the Ghana Stock Exchange. There's been a lot of argument back and forth on this particular issues. Now, Nigeria's attempt at doing this is actually bringing this to the fore again. As a broker, where do you stand on this particular move?
Okay, I'm sure you already guess where I stand, but this call is long overdue. If you recall, this discussion has been ongoing for at least more than 5 years. And I mean, as a market, we say that we have a few companies listed on the local bourse, and we have a lot of multinational companies coming into our country to do legitimate business. At the same time, we don't get to see or get to feel as citizens exactly the impact of the work that these multinationals do. If you talk about the telcos, for example, yeah. So, I mean, the general call over the period, the years have been that let's attract this company, let's get these companies to list on the market so that the local individual, the local Ghanaian investor can also partake in the fortunes of these companies. So
okay.
I'm all for it. Yeah.
Exactly. Fine. Much as it's appropriate to actually call for it, is it appropriate to legislate? The point is, some are also suggesting that make your market attractive and it will attract this investment naturally, but not to legislate. By legislation means that you are compelling them to do it, even outside their will, put it that way. Is it the way to go, you think?
Well, I think there's one way to do it. One way is to legislate. The other way is also to attract. Both ways can work. Both ways can work. Yeah, I mean, if you ask me, there could be a situation where, for example, the government decides to say, okay, we're going to give a rebate on corporate tax. Currently, companies operating in our jurisdiction pay about 25% as corporate tax. Government wakes up and says that, okay, we're going to reduce that to 20% for companies that are listed in our market. That is one way to go. And I think for the future, as a market or as leaders of our country, this is something that they must be considering. But legislation is not out of place.
Okay.
I mean, it is our country. It's our resources. When they come in, we have to find a way to get into the business that they do.
Okay, before we move to other perspective of this same argument, let's look at it. We do have Tallow listed on the exchange. We have Standard Chartered Bank and others, all multinationals. But let's look at their contribution towards the market over the period. I do know that Tallow, for example, has been quite dormant over the period, not doing that well in terms of liquidity, but it is the most capitalized equity on the market. So let's look at the contribution of some of these companies that we are sort of like trying to woo them legally into the system. What do you think they bring on board the market?
Taking one market cycle for Tallow and citing that, I don't think there's a fair comparison, because Tallow itself has had its good times on our market. We all know, or if you follow Tallow, you'd realize that reasons why there's been illiquidity and movements on the share price has been dormant is because projections for their explorations, basically, they've not met those projections. Currently, if you follow Tallow is even more expensive.
No, we are not being specific about Tallow. I just cited as an example of a multinational listed on the bourse. We're trying to look at the positives or what they bring on the table for the market and the Ghanaian, because apparently the rationale for this call is to ensure that Ghanaians and, for that matter, Africans do benefit from our resources. And
Right.
basically,
right.
yeah.
Right. Right. Yeah. So my point is that, I mean, it's a market, and every market has a cycle. Every security has a cycle. When a company listed is doing well, the market reacts favorably to the performance. I mean, let's take the multinationals listed on our market. You mentioned Charlo, there's Stanchart, there's Golden Star Resources, just a handful of them. And all of these securities have seen their good times and their bad times. So it's not and that is the same for any other security listed on our market, irrespective of it being a multinational company or a local company.
Okay.
So,
let me push you a bit to the wall. One of the arguments the SEC boss did make, to the point where he's calling for the speedy delivery of this particular legislation, is to the fact that it's going to correct the forex imbalances in our country. How far is this true?
To a very, very great extent, because we know that most of these telcos will ship away dividends that they declare. But if there's a lot of local participation, and I tell you, there's a lot of interest from engaging with investors. I mean, they ask, so want Barclays list, want MTN list, want Tigo list. There's a lot of interest, even from local pension fund managers and all those. So if this company is coming and there's local participation, what it means is that some parts of those funds that will naturally be shipped away from Ghana will stay within the shores of Ghana, and that in itself, would bring down the pressure on the demand for forex.
Okay.
Yeah.
We thank you very much, Victor, for your time here on the marketplace. That was Victor Avevo from Car Brokerage, giving us some perspective on the reasons why he thinks that we need to legislate, or maybe we need to make it compulsory for multinationals to list on our Ghana Stock Exchange to boost liquidity and also to control or to help control our forex losses here in Ghana. Now, moving on the marketplace, government has called on banks and other financial institutions in the country to expand their services to rural areas. Deputy Minister of Finance Mona Quartey made the call at the grand draw of Fidelity Save for Gold promotion in Accra. Details in this report.
Many financial institutions have over the years opened more branches predominantly in the cities and bigger towns. They argue rural communities do not offer them the market opportunities for profitable operations due to the lack of infrastructure, among others. But Deputy Minister of Finance Mona Quartey says government is working to address all such challenges facing the banking sector. According to her, it is therefore high time the financial services were extended to the rural folks.
Financial institutions now have the opportunity to expand their services and reduce their costs. We are particularly concerned about the persistence of high lending rates, even though we've seen the short-term interest rates come down. The licensing of more banks and the overall improvement in the business environment should contribute to improved services in the sector. I therefore call on other financial institutions to demonstrate a commitment to expand financial service access for all.
Deputy Minister of Finance Mona Quartey spoke to Joy Business at the sidelines of the grand draw of Fidelity Save for Gold promo in Accra. Fidelity Bank launched the promo in August last year as a way of rewarding its loyal customers across the country. The grand draw winner, Festus Amo of Market Circle branch in Takoradi, took home 1 kilogram of pure gold. Divisional Director of Retail, Julian Opuni, told Joy Business their next move is a massive expansion drive across the country.
We set out primarily to try and create a savings culture with not just our customer base, but generally within Ghana, because we see ourselves, or we pride ourselves as an indigenous Ghanaian bank. And we chose to go for the gold because it represents quite a few things for us. Saving is towards a target, and think of going for a gold medal in the Olympics or something. So that represents a lot for us, choosing the gold. Also, as an indigenous Ghanaian bank, gold goes along with being Ghanaian, with our Gold Coast heritage. So that's why we also chose to do that.
Marketplace taking a short break. We are back after this. Enterprises to emulate GC Net after the company paid out dividend worth 10 million Ghana cedis to the government as a shareholder. Government, through the participation of the Ghana Revenue Authority, Ghana Commercial Bank, and Ghana Shippers Authority, own 35% stake in GC Net. Deputy Finance Minister Mona Korte lauded the company for its consistency in the payment of government dividends for over the years.
So in total, the dividend for the year 2015 from GCNet to the government of Ghana's shareholder is 25 million Ghana cedis, and we are grateful to receive that money from them because it's not all our state-owned enterprises or all our public-private partnerships that has been paying dividends, especially during these difficult times. So we are grateful that GCNet has been able to make this payment to us as shareholders. We know that they've also made dividend payments to their other shareholders like GCB Bank and so forth. So they are doing well, and we are glad that we continue to work with them to enhance our revenue performance. We expect that business will pick up significantly in 2016 and 2017. Why? Because our macroeconomic stabilization effort has been successful, broadly satisfactory and successful, I must say, and therefore we are expecting growth in all sectors of our economy, and therefore we expect to see more that will come in terms of dividend to shares, that is returns on investments. And we also again expect to see an increase in revenue collection performance.
Gas supply from the Ghana National Gas Company to the Abuadi Power Enclave is said to have reduced considerably, leading to the loss of 230 megawatts of power. The reduction in gas supply is as a result of challenges confronting the FPSO Kwame Nkrumah, which compelled the Jubilee partners to reduce gas supply to Ghana Gas from 87 million standard cubic feet to a day 47 million. Sources say this current situation is being attributed to bad weather conditions since the defective turret was no longer in control of anchoring systems of the vessel. Communications manager of the Ghana Gas, Alfred Ogbami, has joined us on the line to tell us more about this. Mr. Ogbami, you're welcome. Okay, we don't have Ogbami on the line. We're actually getting you as and when we make contact with him. So that is exactly it. Ghana Gas supply to Ghana. I mean, others actually curtailed as a result of some of these circumstances to do with the FPSO. As and when we do get in touch with Ogbami, we're going to actually get him to you so he's got a lot more perspective on this. We're taking a break. We'll be back. Now, time for your investments and look at how they are moving and how the direction is in terms of the equities market, the commodity, and the Ghana cedi against the major trading currencies. Now, we are starting from the Africa on the continent, where the South African market, which actually benches on FTSE JSE All Share Index, recorded 501.10 points as the year-on-year moved to 2.63. But in Nigeria, they saw some marginal decline as the NSE All Share Index reduced by 298.90 points. But the year-on-year is still averaging around 1.27% per annum in the positive regions. And let's look at Egypt and how the EGX 30 index is performing. The EGX 30 index dropped significantly by almost about 201.07 points as the year-on-year depreciation of the market also saw some marginal improvement to about 2.52% year-on-year. The MASI, which is the Moroccan All-Share Index in Morocco, also declined marginally by 60.88 and still standing 7.26 as the year-on-year performance of the Moroccan All-Share Index. Now let's look at the Nairobi All-Share Index, which records the total performance of the Kenya's equity market dropped marginally by 0.39, and the year-on-year performance of the exchange is at negative 3.86%. Now moving on still here in Africa, we're looking at Tunisia and how its benchmark tune index is performing as it dropped by 127.61 points, and the year-on-year is giving money to the pocket of investors to the tune of 5.85% per annum. And Ghana here, we lost almost about 0.80 points, as the year-on-year is in the negative regions of 10.44 per annum. And the BRVM, that's the Bourse Regional Duvelet Mobilier, the composite index, which measures the Francophone West African equities, also recorded a marginal decline of 0.88, and the year-on-year still remains 0.62 in the negative region. And finally, the Mauritian market, which is the Semidex, recorded some marginal depreciation of about 1.40, and 3.31 is the average number for the market over the years. Now, that's exactly how the market is, because after Brexit, a lot of the African market have not yet really recovered. So recovery rate on the continent has been quite poor and very slow, if you ask me. Now, moving on, Ghana did record a total volume of 126,769 last Friday, at a total value of 507,620 in terms of value. That brought market capitalization to about 55 billion and 3 billion 11,000 Ghana. So that's how much the Ghana Stock Exchange is worth as you speak. And the composite index, as I did indicate, actually grew by 8.56 and still standing somewhere around 9.98%. Then the financial index, which measures the performance of the financial equities on the Ghana Stock Exchange, also saw some improvement, or some marginal improvement, to about 11.99, and the year-on-year still standing around negative 12.66% per annum. Now let's look at those equities that really helped move the market on the Ghana Stock Exchange last Friday, and as it opened to this morning. Standard Chartered Bank led the pack after it returned 6 pesos per share to its investors and opened this Monday morning at 14 Ghana cedis 30 pesos. And of course, Ecobank Transnational Incorporated, also known as ETI, returned 1 peso to their investors as they opened this morning's market at 20 pesos per share, whilst Aluex also saw some positive return of 1 peso and opened the market this morning at 11 pesos per share. But unfortunately, Total lost a peso to its investors as they opened the market this morning at 3 Ghana cedis 96 pesos per share. Now, we're looking at Nigeria, the biggest economy in Africa as we speak. The market actually saw Wando topping by 68 kobos. At Van Leer also did same, almost around 46 kobos. Restarex did 21 kobos. NPFM FB Bank also did almost about 5 kobos, and Continental did 5 kobos respectively, to make the top 5 gainers position of the Nigerian stock market. Now let's look at the losers on that Nigerian bourse. Topping the chart of the top 5 losers of the Nigerian bourse is FCMB, followed by Transcorp Incorporated. NEM Insurance was there. Livestock has also been there, and also Transport also was there, all losing 1 kobo, 2 and 4 kobos respectively on the Nigerian market. Nigerian market seeing some recovery activity there over the period. Now let's move on to the international market to see how the major commodities of Ghanaian interest are faring there on the market. And crude oil keep declining in terms of value. As by the time we came to the studio, we were coming to the studio, crude oil had lost about 51 cents to be trading around $46.25 per barrel. As gold also lost $8.36 to be trading currently around 1,357.45 per ounce. And cocoa, the only gainer of Ghanaian interest, also gained almost about $24 to be trading currently around 3,121 per ton. So that's exactly how the commodity market also is faring currently. That particular market is very, very young. It just started. So we bring you updates on that in the evening on Prime. We'll be looking at that. Now let's look at how the Ghana cedi is faring against the top 5 major trading currencies here in Ghana. And against the US dollar, the cedi dropped some value as it trades around 3 Ghana cedis 93 pesos. And against the British pound, the cedi appreciated marginally to be trading currently around 5 Ghana cedis and 9 pesos. And against the euro, it saw some appreciation. Against the Chinese yuan, it appreciated. And against the CFA franc, it also did same over the period. So I think For today, the opening for the week, the cedi has been quite strong against the major trading currencies. So that will be it on the market. That will be it for your investment, for investment bankers and all of you there who want to do some cross-border trading. This is your platform, and this is where we draw down curtains on the program for today. My name is John Kojo Amwako, but you can stay interactive with us. Our Twitter handle is Joy Business GH, and on Facebook, it is Joy Business. For more business stories, you can log on to myjoyonline.com/business. Have a very wonderful afternoon.